Well, we talk about the dollar, and I think the first chart I want to bring up is cable. So what I like about this Blake is I've got a weekly chart, which of course we don't trade off weekly charts, but it gives you that big picture oversight, doesn't it? It just gives you the sort of really big picture aggregation of flow and capital and how everything's sort of into this kind of hodgepodge of price action that we've been seeing and the setup. And what I like about this one at the moment, which is saying to me that perhaps we could see a reversal, perhaps into 117. 60, those kind of levels into those previous lows, is that we're just holding those lows from 2020. You can see around 114, but we've got triple divergence playing through there. So we've got that divergence trade. We've seen a series of lower lows. We've seen that coming through, but on the RSIs, I know we can't really get much lower. So when you're looking at divergence, you've got to look at that starting point and say, well, it couldn't actually really make a lower low from that point in the first place. But you can see that we are in high alert on the weekly chart from this fairly lengthy triple divergence that's playing through. And for me, there really isn't a better reversal indicator than divergence, especially triple divergence, and especially when it comes off a significant pivot like this. So this is a must-watch chart for me. Again, why do we like the pound? We don't like the pound. There's very little to like about the pound, but positioning has got quite extreme. And if we were to see a weaker dollar, then you'd expect the pound to rally. So we got this in reversal watch. What do you think?
It happened to be my chart of the day, and we didn't discuss this between Chris and I ahead of this show, but it was my chart of the day on our blog. And look, there's been a lot of bad news that has already been priced in to the sterling. That doesn't mean that the sterling's not going to continue to go down. I think you can sell into rallies, but I like it down here, Chris. Matter of fact, myself personally, I've been establishing a position over the last couple of days. I'm slightly in profit now, and I'm actually looking to ride it for a bounce. So I'm with you already, and so I hope you're right, because I'm going to be trading it to the long side from here. So,
well, you're kind of catching a falling knife in a way, but
of course,
if you want this, I'd be looking for longs, very small size, looking for that reversal. It's aggressive at these levels, but you've got a stop loss below the figure, and looking for that momentum to take it into 117.60. It's a low probability trade at this stage. We need that divergence to play out, but it's definitely one that's very much on the radar.
Sure is. All right, well let's take it over to silver for all you precious metal buffs and buffettes out there. This is speaking of divergence, look at the divergence on the relative strength here. Now, what I want to point out, and you'll see to the far right of the chart, that is a 618, the golden fib, if you will, of the 2020 lows, the post-COVID lows, all the way up to the early 2021 highs. If you pull all that data, you came down to the 618 retracement, and what you'll notice is back in June, I believe it was in June or late May. Let me just double check that. It was early July. In early July, we put in a low right at the 618. Now, anybody who's long got long right around there. They played it to the long side, and then as you can see, we had this bear flag pattern that took us lower. It took us to new lows. RSI divergence. It got every long out of the market. Then we got a false breakdown. Chris, I love false breakdowns because false breakdowns usually lead to breakouts. That means the other direction going up. So in this case, as long as we can stay above 18.15 and we can hold above that, especially post ECB, post Jerome Powell tomorrow, I believe silver can trade back above 20. And I like it as a setup, going the other direction and taking it for a bounce. What do you think here, Chris?
I just think everything's looking correlated. So what we're doing on this episode is exploring the fatigue in the dollar, so to speak. If you're looking at real rates moving lower, potentially, I can't see them collapsing, but they might gravitate a little bit lower into CPI post-Powell. But if we are looking at the emergence of a tactical sell-off in short-term sell-off in the dollar, then of course silver's going to go up, and it's going to go at a faster pace than what we're seeing in gold. Gold will go up. Bitcoin might see a bit of a reprieve back above 20,000. Ethereum might find a few buys. But what we've seen on this show so far is this kind of correlated trade. So the dollar, we're looking at cable, we're looking at potentially silver moving up. It's all one trade really, isn't it, Blake? And, you're looking at silver and it kind of correlates with what we've been seeing in that dollar flow as well. Well, Blake, one of the things we're also looking at is the S&P 500, the US500. Yeah, we talked about this weaker dollar. We've talked about real rates. We've talked about what's going on in silver and the factor. But what we've also seen is this correlated in other risk assets like the S&P 500. What we saw is we last week wanted to see that 61.8% retracement of the June-August rally hold. We've seen that. We've seen a couple of days where prices traded below that Fibonacci retracement level and it's closed back above. The market did not want to see it close below that. From a psychological perspective, to me, that's really important. We've seen a bullish engulfing, so prices traded below the previous day's lows and closed quite nicely above the previous day's lows. I'm looking for a short-term moving average crossover, which would confirm the move, but I want to see above 40 sort of 1480, 4020, those kind of levels to get me feeling a little bit better about this. But it's quite constructive so far. What are you thinking there?
Chris, we go back to your correlated trade. Look, the S&P, when you said that number today, 4020, I'm looking at 4020 and a break above that. It takes us to 4090 in pretty short order. So I'm looking at a real quick move. And if you're thinking that, and I'm thinking that to me suggests that we're probably going to get a break above that. And if we do get a break above 4020, it should be, a pretty quick jump to 4100, right around those levels. I like how we're holding the 618. And like I said, the correlated trade, if the dollar starts to weaken, that would just suggest to me we're going to see risk assets rally. We're going to see bond yields come down. We might even see crude come down, but we're going to see, a boost up in crypto, some dollar pulling back. And I like the S&P. That doesn't mean that I'm bullish the S&P from here. And I don't even necessarily believe that the low for the year is in.
Yeah.
But I do think that we could have a tradable tactical bounce here, a tradable bounce that we can sell into probably in the next week or two. So I like it from here, Chris. I think that 618 retracement, that Fibonacci level, held like a kingpin.
I think if that goes, then I think the chances of going back to test those lows obviously ratchets up. But again, I come back to my point. Watch real rates. I think they and also that terminal rate, which currently sits around sort of April time for next year on the Fed funds future. If that was to pull back a little bit in terms of yield, I think that would be very positive for risk. I think the dollar's key to this. If we get a weaker dollar, everything goes up. But I like the fact that crude's also collapsing as well. I think that's really good for humanity. I think it's really good for risk as well.
All right. Well, speaking of the crude collapse, and I know we're going to hit on this and you want to talk about it, but we probably just didn't do this in order. Let's talk about the pound Canadian, because I want to trade the crude breakdown or the weakness in crude through FX. And how I'm going to do that is through the Canadian dollar, and I'm going to be long the pound Canadian. And I do like this particular trade for a couple of reasons. Technically, just like the cable, just like the sterling, we're at channel support. You'll notice we're at 127% extension of a big range. That range high, well, actually the range low, let me put it that way, is January 2017. The range high, which you don't see on this chart, is actually the March 2018 highs. The 127% extension of that number comes in right at where we pivoted off today. We got a nice bullish outside day on that chart. Relative strength is divergent. And we just got past the Bank of Canada today, Chris. So we don't even have to worry about the Bank of Canada. So we got that out of the way. So if crude continues to weaken, the sterling continues to bounce, which I think it is based on your analysis just a few instruments ago. The pound Canadian is actually my vehicle of choice. What do you think?
Yeah, I think similar situation as sterling against the dollar. The CAD's obviously, you make some good points around the fact we've now gone past the Bank of Canada meeting. The next central bank meeting for the UK, which we look at the pound side of things, comes on the 15th of September. The market's pricing in 65 basis points. So I think we get a 75 basis points. So we've got an extra 10 basis points to give us that little bit leg up. But if you look at the sterling curve at the moment, the pound's not being correlated to the fact that we have seen rates in the UK really ratcheted up. Those expectations have ballooned because they've got other problems there as well. And an aggressive rate hiking cycle is going to really hurt the economy, and people are looking at it from a relative growth perspective. The question is, will that start to change? Will start people looking at the pound in a more optimistic light, knowing that so much is bad news is priced in, knowing that we've got all this fiscal coming through from Liz Truss now, who's been confirmed as the PM. So again, do you trade sterling dollar? Do you trade sterling CAD? I think the question is which one's going to move the most. So it's choose your weapon, but I think they both do the same thing there.